Hello guys, and welcome back to the channel. So in this video we're going to talk about Palantir earnings, but from a different viewpoint, because I think a lot of you are missing the point that these earnings don't actually matter. So this is what we're going to talk about in this video. It's going to be interesting, and if you like this video, as always, please make sure you sub, and you can also follow me on X at Vince is Bullish. That is my ticker symbol. So you have to keep in mind to not miss the big picture when it comes to the current Palantir earnings. Now, what do I mean by this? So in the big picture, by the way, this is only for long-term investors, and I think most of you who watch my channel are long-term investors. This is not for traders, this is not for speculators, this is not, for people who like to jump on hype and, then jump off. This is strictly if you have a 10+ year time horizon with Palantir. So when you look back 10 years from now, it ain't gonna matter what Palantir reported in Q2, and I want you to remember this, okay? And you also have to remember that what is your goal with investing in Palantir? So I myself, I'm very happy with having a compound in growth rate of 20% on my portfolio, and I'm ecstatic if it's 30% per year, okay? So you have to remember that Palantir has just gone up 100+% compared to my cost basis and a lot of people's cost basis. So that is 3 amazing years that just happened in a few months, okay? And when these things happen, yes, some part of it was due to that Palantir was undervalued, but some of it is that Palantir is pulling from its future, meaning that it might take 1 or 2 more years until Palantir goes into the current valuation that it has, okay? So you have to keep that in mind. But if that is true, so if that is true that your money might be in Palantir, and it's not going to do anything for the next 2 years because the company has to grow into the earnings, then the logical outcome would be that you should sell and put your money into something else. Well, so this is when a lot of people start talking about, securing your portfolio, having to diversify, and, you need to trim your winners. And I think that that is just a horrible idea. So if you believe that it's impossible to time the market, and it's pretty much impossible to time the market. If 2022 didn't show that to you, you're hopeless. We had all these legendary investors, both bull and bears, saying what the market was going to do, and everybody was just dead wrong all the time. So if you don't believe if you believe that you can time the market, then please unsubscribe. This channel is not for you. And if you believe that you can't time the market, then I need to show you a few historical examples, if I can find here. So one of the things that I want to tell you, so we all knew that this is the chart of Palantir, so we all knew that around here Palantir was getting really undervalued. So if you were smart, you were just every month having a portion of your income that was going into Palantir. And you got really lucky, because you had from basically May 2022 to almost May 2023, so 1 whole year, to accumulate a monster position in Palantir, right? And then in the span of just 2 months, okay, maybe 3 months, the stock went berserk, and it went almost 150% up, okay? But what would happen if you cut your winner because, it went a little bit up here? Then you miss out on almost twice your gains. Or what happens if you are not buying here and accumulating because you have a hunch that this is not the time then it's going to go? Let's say that you waited and you only started your position here, then you would have only 1/10 of your position. So the good viewpoint was accepting that you cannot time the market. You did your valuation, and you were just DCAing and accumulating shares while the stock was at a discount, okay? Now, I want to show you another stock that I unfortunately watched from the sidelines. And this stock is Mr. Tesla. So this stock needs no introduction. And I want to show you that here, there was a 6-year period when the stock didn't do anything. So I wouldn't blame any long-term investor. And again, I have the benefit of hindsight, so it's very easy for me to say. I honestly don't know if I would have been able to hold the stock for 6 years and not doing anything. But what happened if you held on for that one last year? The stock 10x'd. It 10x'd. And again, what would have happened to you if you waited these 6 years, or just 2 years, or the last 1 year, and the stock starts rallying, and then you hear the smart guy say, okay, now the stock is overvalued, you need to trim your position, or you need to sell off and go into other stocks. You would have missed out on 8 times the gains, because it went double, and it went double and double and double until it went 10x. So you would have missed 8x on your capital because you were trimming your winner, despite you did your due diligence right. You were wrong, you were correct on your thesis, you DCA'd into the stock, you did everything correctly. The only thing you did wrong is you really just cut your winner. So I highly recommend against this. So where were we on this slideshow? Let's get back to it. So if you believed in these companies, the only way to really participate in the increase was to own the stock, because you couldn't time when they would go up or how much they would go up. You would just have to own the stock and, enjoy when it goes up, 3x in 1 year, and then try to enjoy when it goes sideways 3 years. But that's the way of the long-term investor, okay? But now, there is this question that a lot of you are asking. So what should you do if you think Palantir is overvalued? I currently think that Palantir is sort of overvalued, but let's see what should be done. So first of all, we don't know the correct value of Palantir because we need the earnings data, okay? We know that there has been a lot of hype, and hopefully there has been a lot that has happened with the company fundamentally, and these things can wildly change the valuation, but we don't have concrete evidence that this happened, okay? So maybe the company is only going to grow 13%, maybe there's no new customers, maybe there's no more gap profit, we just don't know, okay? So when the earnings come out, you should reevaluate where Palantir stands compared to your thesis and come up with what the true value of Palantir is for you. And if you still think it is overvalued, which might be the case, to be honest, then you just stop DCing into it. It doesn't mean that you have to sell it, because you know that you were right about Palantir. You know that this has the potential to have the next 10 plus years of going up chart, like Apple, like Tesla, like Google, and you don't want to miss out on that, because it's hard to find these companies. These companies don't come around so often, okay? So you were right about this one, then just sit on your hands with your butt and don't do anything. And if you're itching to buy stuff, then DCA into other things like Enphase or Tesla or whatever it might be. By the way, let me know in the comments, what stocks are you guys DCing into that is not Palantir, okay? Personally, I really like Enphase. I'm going to make some content about Enphase. It's so interesting that there has been so much upside, like the market has gone up so much, and it feels like you missed all the stocks that could have, that you could have bought into. Whereas Enphase was, when the market was bottoming, it was like at the top, and now it has gone quite a lot down. And I believe that it's a company with a fantastic future. Anyways, this is not an Enphase video, but for me, if Palantir is overvalued, I might stop DCAing into Palantir and DCAing into Enphase. So this is my advice, but to be able to do this, we basically need to wait for earnings. And I just want to say good luck tomorrow. May the stock gods be with you, and I'll see you tomorrow in tomorrow's video after earnings, okay? So sleep tight and see you tomorrow. Ciao, ciao.